Here we go. Thanks for joining us for October, the home buyer edition. And only one of us has a dad joke. What is the difference between a bad joke and a dad joke?
I don't know what.
One letter. He's still mad at me.
It's just a little too simple. A little too simple for my liking.
So this month, the question I'm getting the most from buyers that we're dealing with is, hey, the Feds dropped the rates. I thought since the interest rates were going to start going down, the market would start picking back up. And I'm getting that kind of feedback, kind of questions. But there's a lot of things wrong with that sentence so far.
Mm-hmm.
One being that the election years, typically over the last 16 years, actually the last 4, have been a decline in the economy up to the election just because of uncertainty, maybe even a little fear of what's going to happen next. Uncertainty does not breed investing or people buying things.
Yeah.
And the other part is you've got some information that the rates really haven't taken the dive that we thought it was going to.
So that's it's interesting how delayed the general media is when it comes to mortgage rates.
Yeah.
Anytime you see an article, Fannie, Freddie is reporting that mortgage interest rates did this, it's always at least a week old. And then by the time it gets to the standard consumer, a lot of times it's even 2 weeks old.
Yeah.
The Fed, we kind of knew that the Fed was going to cut rates in September. The expectation was that they could cut 50 basis points. It was a foregone conclusion that they were going to cut 25 basis points. They cut 50 basis points. This is a graph. I just want to show you a graph, right?
Graph.
I love graphs.
It's a solid day.
So this is what happened on the way to that Fed rate cut, right? And this is what's happened since the Fed rate cut. Rates have gone up. And why is that? There's a few different things. One is kind of this standard investor lingo that is buy on the rumor, sell on the news. Yeah. Meaning an investor, a Wall Street investor, they're in it to make money, right? So as soon as they hear that the Fed's gonna cut rates, they're gonna buy mortgage bonds and then sell on the news, meaning I can make profit on this purchase that I just made. The other thing is ever since then we've had bad data. Good data is bad data when it comes to mortgage rates. We had a blockbuster jobs report. The BLS jobs report came in just way above expectations. That was one of the worst days in the bond market we've had in a while. But if you look under the hood, the labor market is not as strong as it looks. It's just these jobs reports, the numbers are shocking. You look under the hood, there was a big addition of jobs from 16 to 19-year-olds. That's unsustainable. But, they're in high school and they're getting jobs. There's a big increase in second jobs, so people that have full-time employment that need a second job to keep up because life is expensive. That's not sustainable either. And then you had a big addition in jobs in leisure and hospitality, meaning hotels and restaurants and government work. It's not our labor market is slowing, unemployment rates ticking up. So there's been some things that have happened since that Fed rate cut that have moved mortgage rates higher. We're 0.75% higher probably than we were on September 18th when they cut rates. So it's volatile. It's not going to go down in a straight line. We've always said that.
It's going to be all over.
We're better today than we were a year ago. We're better today than we were 8 months ago.
Yep.
But it's not going to go in a straight line. So you have these little windows of opportunity. I've been sending stuff out to my past client database to say, when I tell you that it's probably time to refi, it's time to refi because it might be there for a day. That pricing might be there for a very temporary amount of time. So anyways, there's a lot going on with that. I want to talk on the election piece.
Yep.
We have to throw 2020 out for a variety of reasons. The COVID stuff made things way different. That was a strong market in 2020. And of course, that was an election year. But again, historically speaking, I think that there's a lot of focus as a U.S. citizen on any type of election year. There's a lot of back and forth. There's a lot of push-pull. It's a tug of war between one side and another. And people just aren't focused on real estate sometimes in those times.
The uncertainty is really what it is. Like, we're not sure who's going to be next, what the policies are going to be, the financial plans, the economy. They just kind of hold still and let everything kind of fall into place. But the data that I've seen on my end I just put out a home seller video, is that the months after the election, no matter who was elected, things picked back up again. And everything was back on the usual. And home sales and the economy kind of picked up, and it didn't matter what affiliation it was, which side. That's just what it was. And it's just people feel better. Really, what it comes down to is it doesn't matter the political party as much as the fact that people have that certainty of so and so is now in charge. Here's the things that are going to happen. Cool, I can plan for that.
Yeah, it would also be a little bit different if one side was kind of running on some sort of housing specific policy. There's been a few little rumblings of things that have thrown out there that one side is going to do, some sort of unrealized capital gains or something like that, but nothing's really stuck. But if something were to rise where it's one side is going to, incentivize first-time home buyers to the tune of X amount of dollars or tax credits or something like that, and that was a leading policy, maybe that would pick up some activity. But again, we don't know if that's going to actually take place until one side wins. Right?
So the other part too is we've heard that there might be some additional cuts. What kind of information do you have on that? We're not planning on it because it's so uncertain. But what are you hearing about that, and what should people be looking for?
Yeah, I mean, you walked in my office earlier. I was watching Bloomberg. I watch it every day. And there's a lot of financial pundits that basically say that they'd be supportive of a pause. I think it is still expected. It's like an 83% chance that the Fed cuts 25 basis points, which is, that's essentially the smallest cut you can make. So the 50 basis point cut in September, 25, and then it's kind of a wait and see approach. Jerome Powell in September said, we're going to go meeting by meeting, cut by cut. A blockbuster jobs report certainly doesn't help. I think that's why the expectation is 25 basis points, that they'll do the bare minimum. The Fed futures up until this time next year, it does say basically like 100 to 125 basis point cuts. So they are going to continue. The expectation is they're going to continue to cut over time, slowly. It's going to be a slow bleed. So again, mortgage rates aren't going to go down in a straight line, but generally speaking, we are in this downward trajectory. Where do you want to be? Do you want to be purchasing a home on that? Think about it as a roller coaster. We just tipped that first big drop, right? And we're going to continue to go down. Do you want to buy a house here or wait until it gets here?
Yeah,
timing the bottom is
going to be tough.
Very, very difficult.
Again, if we could time the bottom, we would be doing it.
We wouldn't be doing this video. Trust me. We wouldn't. Yeah.
So, all right. So my next question is too, if people want to be prepared, what are some of the let's say three things. When somebody walks into your office, what are the three things you get excited to see on their applications?
Oh, that's a very good question.
Right.
I love to see someone that has a lot of control of their finances, where I ask them, where do you want, payment wise, where do you want to be housing expense wise? They have a bona fide answer. That's very helpful.
Good.
And that's not necessarily on the application. It's more verbal. That they have control of their debt. And what does that mean? Not necessarily, you could have a lot of debt or a little debt. It's that you're able to manage that debt and still save money.
Got it.
That's the key, where if I'm going to tell you you're going to enter into a mortgage transaction, you've been paying all these bills and you've been saving money at the same time, that's somebody that has a lot of control over their finances.
Okay, so control of the debt.
Control. You can have a lot of debt or a little debt. Control of it.
Got it.
Yes. Steady income.
Steady income, two. Which leaves me out.
Non-declining.
Because real estate is all over the...
Yeah. Non-declining, really, is what it is.
Yeah.
If you have declining income, it's an issue. But if you have steady income or appreciating income, we love that. And third is the ability to not only come to the table with your down payment, or maybe there's no down payment loan for you, but to be able to pay your closing costs. Because if you have, let's say, 30 grand in the bank, your down payment is 15 and closing costs are 10 to 15, and you're able to come to the table with all of it. It gives us flexibility in the open market, even though, the most recent contract I got 4% closing help.
It pops up. It's happening.
It's here. There's opportunities where you can get closing help from the seller, but if we don't need it, it makes you more competitive. So
those are the three things:
control of debt, steady income, money in the bank.
So there you go. So if you have those three, or you're working towards those three things, that's can help you focus, right? It's not so much like how much you have in the bank or how much you want to buy, pay or big of a house or whatever. The other thing we talk about pretty frequently is being able to like budget and kind of get an idea, like if you're living with your parents or if you're renting, getting an idea of what those expenses are going to be and kind of just have a ballpark idea of what, like, all right, if I had an electric bill and a water bill and these things, like what would my life look like, and kind of get a ballpark idea.
Yeah, if you're renting, you feel that housing expense every month. So that's an easy barometer for me to go, okay, you've been paying $1,800 a month. Is that comfortable? Can you go to $2,200? Easy. If you're living with your family and you don't have a rent, That's a little bit more difficult. So that we've said this on videos before. Start making those reps. Take 6 months and start putting $2,000 into a separate account. And know what that feels like. It's getting those reps. Like it's a sports analogy, but the more you do it, you know what to cut out of your life to make that work.
Yeah, so it's easy. So let's say you put $2,000 for a mortgage. Let's say you put $200 for an electric bill, and you put like $150 for cable, and you just put that aside every single month and kind of see how you feel.
Yeah, I think it's a brilliant idea. Honestly, whatever big purchase you have coming up, whether it be a house or maybe you're talking to people who are thinking, hey, I probably need to get a new car soon. If your payment's going to be $700 a month, start making a $700 a month payment before you ever set foot on a car dealership.
Let's see how it goes.
Yeah.
Cool. So there you go. There's some great information about where the rates are. And so that way, lots of the questions I've been getting are about rates. So now you know where we're at with the economy right now.
Yeah.
You know that it's going to be kind of a slow roll for at least the next, how we got, 45 days or so? We have what? How much of this pain do we have to go through still? 30 days?
You mean
the election?
Oh, yeah. Yeah.
Early November 15th?
We're a month away.
So we have 30 more days of the nonstop political ads on TV and the jostling back and forth and people on Facebook fighting. We'll be good. After that, 30 days, we can all be nice to each other again.
Yeah.
And then from there, real estate will pick back up. We'll have Christmas. It'll be fun for everybody. So there you go.
Again, mortgage rates are not in a straight line. We are better today than we were here, which is like July.
Yeah.
But since that Fed rate cut, things have gone. So it's not going to be in a straight line. But generally speaking, we have better times ahead of us. It's just very volatile.
There you go. So the rates are better than they were. Tim went over some of the things that he was looking for when you do applications. That way you get the practice and get the reps in, and know that the economy is eventually going to pick back up, typically after election, a few months after the election, no matter who's in charge. So there you go. That's some tips, some things to help you kind of navigate the home buying process. If you have questions, it's easy to find us. We're all over social media, or call us. We're easy to find as well. Always in the office. You can sit in and watch some Bloomberg with them in the morning or whatever you got to do.
Yeah. I mean, we can turn on YouTube or whatever you want to do. Yeah.
Thanks for joining us for October. We have the event coming up on the 26th where we're raising money for William, the owner of Chesapeake Bounty, who was recently diagnosed with cancer. We're going to give away pumpkins and ask for donations to give back to that family. And then, of course, we have our November event right after Thanksgiving where we got vendors and the money goes to Project Echo. So we have a lot of fun charitable activities coming up soon. Jump on our social media to see. Or if you want to partake, let me know how would you want to do to get involved.
Awesome. Good stuff.
See you again next month.
See you in a month.